Hello everyone, it is Canadian Futures Trader here. It is currently May the 5th, 2021. Welcome to the channel and welcome to the video. In today's video, I'm going to be going over one specific trade. Well, I guess it's technically two trades. You're looking at them now. It goes on for about 10 minutes, so I'll walk you through why I entered, what's happening, all of those things. If you're new here, be sure to subscribe to the channel. I cover a few things related to futures trading, mainly related to the funded trader valuation companies, my own journeys with them. I've had some successes and I've had several failures too. I document it all and put it on here to show what it's really like. As well, I put up reviews, kind of the pros, the cons, what it's like to go through the funding process. As well, when they run deals, I put out videos about those. And lastly, I need to put out more videos like this where I actually explain some specific trades. So let's get to this trade. So I'm already in this trade when I started recording, so I'll explain what's going on. So on the right hand side here, I have the Ultrabond. This column here, kind of in the middle, is the 30-year bond. The second to last column is the 10-year note, and lastly on the far left is the 5-year note. You can kind of see the names of the instruments up here on the top. And then this ticker tape is for the Ultra Bond, so it's related to this. I primarily trade the Ultra Bond. Today I happen to take trades in both the Ultra and the 30-year. So let's get to explaining this trade in particular. First of all, why did I enter? So I am currently long in the Ultra Bond and the 30-year. Now, one thing, if you've seen any of my other videos, I've changed Jigsaw slightly. I used to show in this column the P&L for each tick. I've removed that. I've taken that off. I'm really making an effort to get away from trading based on P&L. It's something I hear recommended time and again from traders who are far more successful than I. Focus on setups, focus on taking good trades. When you have the dollar signs right in front of you, you get caught up on the dollars, right? You know, maybe you're at a $150 winner and you're thinking, ooh, $200 is right there. Maybe I'll hold on a little bit longer, when based on the trade itself, you shouldn't be. So I've removed all dollar signs. You can tell where I'm at in a trade based on a few things. So one, when you see the blue here on the price, that means I'm long. If I was short, it would be red. As well, down here in kind of the order box, see +2 and you see +3. That's what I'm currently open in each of these contracts, the Ultra Bond and the 30-year. So these red boxes are my stop loss and my take profit. So when you see 2S, it's a stop. So I'm currently long at the price of 11. I have a stop loss set at 7. I have a take profit set at 17. Now I'm not necessarily, this isn't a hard number that it's calculated and I really think it's going to get there. It's essentially there in case something happens and it spikes up. I want to grab all that profit. Just based on my experience, having traded the Ultra Bond, it sometimes will spike, but it's not like it's going to spike an entire dollar in like a single movement. If it spikes, it's going to spike maybe 5-6 ticks. So that's what that is there for, is to grab an abnormal spike. Likewise, on the 30-year, same logic. I have a little bit tighter stop and a little bit smaller take profit. It doesn't move with the same velocity that the 30-year moves. So that's the rationale behind the stop and the take profits. Now, I'm going to mention one thing and then I'll explain a bit more why I even entered this trade, what I was looking for. You'll notice here that it says 2S and 2L. The Q is your Q position, where you are in the Q. That means I have a stop loss set for a quantity of 2. This was a mistake on my part on the 30-year. I was actually long 3 contracts. So shame on me, I didn't put in the right stop. And I realized that later on, actually when it goes to get me out of the trade, I realized, oh wait, I only had a stop of 2 contracts, not 3. So later in the trade, we're going to see it hit the stop. It'll only execute for 2 contracts, so I'm still long 1 contract, but we'll get to that. The Ultra Bond is good though. I'm long 2 contracts. I have my stop set with 2 contracts. Now at this point, I'm going to pause this because it's already getting ahead of me. So I'm long, and this is currently paused. I'm long at 11. The current price flashes in yellow, so it's currently trading at 14. You can also see, the bid and the ask right here, so it's trading right here at this price level between 14 and 15. Likewise, on the 30-year, I'm in at 30. It's currently up to 0-0. Remember, the Treasuries trade in 30 seconds, so that's why it goes 29, 30, 31, 0. These are 30 seconds, not 1 cent increments. So I'm currently up 2 ticks here. I'm currently up 3 ticks here. What we'll see in a second is I'm going to start managing my take profits. I start moving them up. Again, they weren't hard numbers that I had targeted or anything like that. They were just there in case the price happened to spike up. You'll also see me manage my stop. Now, I paused the video, like I mentioned. While I was talking though, I moved my stop from down here. I think I had it at 07 or something. I've already moved it to the break-even level. I have a bit here of buffer, and I'm going to move this one as well shortly. Okay, so let's finally get around to why did I even enter this trade. So the treasuries tend to move in a fairly correlated pattern, right? If one is pushing the high, they all tend to be pushing the high. Same with the lows. They're all kind of trending, ranging. They all kind of move lockstep. Now, they don't necessarily move lockstep. One moves one tick, they all move one tick. They're kind of arranged here in a sense where the 5-year tends to have the smallest range. 10-year, a little bit bigger range, 30-year, bigger range, Ultrabond, the biggest range. So you're going to see the most movement in the Ultrabond related to the ones to its left. That is part of why I trade the Ultrabond. You at least can get a bit more movement. If you want something really slower moving, you can kind of move down the line here and trade one of these products. You'll also see there's just more liquidity. You're seeing bigger numbers here. You know, there's almost 3,000 contracts or more at each of these levels. There's only about 500, let's say, at each of the levels on the 30-year. And once you get to here, it's more like 100 at each level. So why I entered the trade. The 5 years, so I have to preface this and say I had been watching it for a while, so you're kind of jumping in while I'm in the trade. I've been watching it for a while. The 5 years have been pushing up here. They're right at their highs. You can tell it's the high based on the price level here. If it's kind of white text on gray, that means the price has touched that level. If it's black, it has not. This also is essentially a volume profile, so these are all contracts traded, and there's no contracts traded here. So this is the very high, and it's sitting right there, and they're also getting ready to push through here. My general observation on this day, in this moment, was that the traders of the 10, 30, and Ultrabond were kind of waiting to see what was going to happen with the 5-year. If this broke up another tick or two, very much expected these to catch up. So let's just look at the Ultrabond. So the same logic kind of applies to the Ultrabond as applies to the 30-year bond. So let's just talk about the Ultrabond for now. So at the point I entered, this was sitting just 1 or 2 ticks off of the high, and it looked like it was pushing up. The Ultrabond, though, I entered down here, 1, 2, 3, 4, 5, 6, 7, 8 ticks off of the high. So if this could break up a tick or two, you might get a full 8-tick movement up here, and I wanted a piece of that. So that's why I went long here. The same story was true with the 30-year. You know, it was sitting down here. This is obviously where I went long at 30. At that point, the high of the day was 30, like 5 ticks. Let's just say 5 ticks above it. So fully expecting that if this can break, the 5-year can break through, we'd see all of these catch up. If I'm wrong, so be it. That's why we have the stops in. So I'll continue to let this play. I already mentioned that this stop loss isn't for enough contracts, but we'll fix that. It doesn't come into too much play. But nonetheless, so at this point, I've moved my stop loss on the Ultrabond to break even. So just to reiterate, the price I got into is in blue at 11. I've moved my stop up to here, so at worst, I'm breaking even on this one. I currently have my stop on the 30-year 2 ticks down, but I think I move it here shortly. Let's let this video play now and see what wild action happens in the treasuries. So we're seeing the Ultrabond move up, and you're seeing right here what I'm doing. There's a bit of a delay. I just moved my stop up to 1 tick profit, and I moved my take profit up above the high of the day. I'm doing the same thing over here on the 30. You saw me move that. There's a bit of a lag. That's part of why I don't record a lot of trades all the time. I'm doing stuff, and then it takes a second or two. So currently my stop loss is set at break even on the 30, and it's a tick above. I think I'm getting ready here to move my stop loss up even further. Yep, there it goes finally. And I move my stop loss here up. So this is going to be a profitable trade no matter how you slice it. Even if the price comes completely against me at this point, I'm going to get 2 ticks here. I'm going to get 1 tick here. I'm in for 2 lots on this. If you're not familiar with the treasuries, these two trade in increments of, I'm just going to say $30. It's $31.25, but let's just call it $30. So I'm basically making $60 on every tick here, and I'm making $90 here. Remember, I'm long 3 contracts. So not a bad trade so far. Now I've moved my stop loss up even further. So we're currently 1, 2, 3, 4 ticks in the green here and 2 ticks here. Looking back at the 5-year, now there's some pressure down, but it hasn't broken. So, and that's part of why I move my stops up pretty close. Like I'm just 1 tick below this, right? I want every piece of this that I can get. So if it does start to fire against me, I at least get the most of this trade. So at this point, so we're 7 minutes into the video, there's only a couple minutes left. So let's just watch it. I'll talk you through what's kind of the replay, essentially. I'll just explain what I'm doing. So I'm managing both trades. So that's part of what I do with the bonds too. It's like, just because you enter, so here I'm moving my take profit up and I'm doing the same thing here. Again, I'm just looking for the spike. I mean, I'm not honestly, especially when it pushes the high. When it hits the high, a lot of times, the stops start firing and it will do a little run of several ticks. So if anything, this is I like what I did here. Not to pat myself on the back, but if it broke through here, it could easily spike up to here. So at this point, it's kind of dancing around. It kind of like went up, it came back down. So I'm fine. Like I'm fine at this point. I'm getting 1, 2, 3, 4, 5, 6 ticks profit here, 2 ticks profit here. I mean, we'll see here in a second. I'm still watching the 5-year. So part of what I started to say a few minutes ago and didn't finish my thought was that you're constantly evaluating what is going on. Like I didn't just enter this trade and set a stop and a take profit and cross my fingers and say, well, hopefully it goes up and I make some money. No, this is a dynamic situation. Adjust to the situation. The situation is the price is currently at 18. I'm in at 11. I'm sitting on a nice big winner here. I'm sitting on a nice big winner here. But guess what? It hasn't flown through the highs of the day yet. So maybe it's time to think about running a bit tighter stop because it might turn around on me. So that's kind of, what you need to be constantly doing. Now, this is part of why, okay, so I'm going to pause this for a sec. Actually, I'm going to go back because while I was bantering, this kind of hit my stop and I'm going to show you what happened. So, okay, so right here, remember, I have a stop set of 2 ticks, but 2 lots, but I'm in for 3. So I'm going to let it play. It does take down and it takes out 2, but because I have 3 contracts, I'm still long 1. One thing I really wish Jigsaw had was some way of up here on the DOM showing you how many contracts you're in for. Like I really wish this column also showed like over here, like you're long 3 contracts. Something for them. Hopefully one day we'll get that. So anyways, I'm going to let this play. I backed it up. So we're going to see the spike down. Again, there's a bit of a lag. It took me out there. That was kind of a weird one. I'm not sure what happened there. Why? Because the price stayed up here, but it popped down and took me out. Honestly, not sure. So at this point, I realized what I've done. I'm going to pause this for a sec. I realized that I'm still long 1 contract. The take profit was wrong, so I'm basically going to fix it now and put in a new stop loss for the 1 contract that I'm still long for. So let's let this play. Yeah, I'm really not sure what happened there, how that popped down and took me out when the price didn't even trade down there. Like I should still just be in for 3 lots on this one. Nonetheless, I mean, looking at this in retrospect, nothing I can do. And still, hey, it's a winner. I'm not sure what happened there. So this is playing. There's legitimately basically nothing happening right now. And that's kind of how the bonds can go. There'll be a flurry of activity and then it'll sit for a few minutes and nothing happens. So, okay, so let's continue to watch here. There's only a few minutes left, guys. So hopefully this is making sense. Feel free to email me any questions or whatnot. Again, I don't claim to be an expert. I'm just going off of what I've learned myself and through my little bit of experience. And at the end, we'll tally this up, but this is going to be a nice winner. So right here, it's ticked down. Like I said, I was keeping a pretty tight stop just because it's at the high doesn't always mean it's going to go on a run and break it. You're also seeing this start to tick down. This kind of touched the high. Now it's coming down. And there you go. I got taken out on the Ultrabond. And then I have my 1 lot stop here. And I guess as soon as there's some downward ticking. So anyways, so this is going to get taken out. But anyways, guys, like I mentioned, email if you have any questions. Hopefully you like this video. You like this type of video. I'm going to try and record more trades. And there you go. It was taken out. So let's tally up what we made in ticks. Okay guys, so I paused the video for a minute just to do the math here for you guys, not to make you sit through it. So let's go through it really quick. So the Ultrabond, I entered at the price of 11. That was over here, 187.11. I exited at 17. That's when it came down and hit my stop loss that I had been trailing with. So that's a net of 6 ticks times the 2 lots that I was in for times roughly $30 per tick per lot is $360, just to use round numbers. 30-year, we entered at 30, so that was right here, 157.30. We exited at 01, and I went back in the video and verified that even though it sold 2 of the lots first, and then we did 1 more after, they all cleared at 01. So we got 3 ticks winner there, times 3 lots, times $30 per contract per lot, $270 winner. So combined $630 before commissions. Commissions tend to be cheaper on the treasuries. And as well, we're only paying commissions on 5 lots aggregate in total, and then both sides obviously. So wouldn't even if it's not, but if it was $30, we'd still be up $600. So not a bad trade. So I know the treasuries aren't always the most exciting. I just made you sit through probably a 20 or 30 minute video watching 2 trades happen simultaneously, but it kind of comes back to having a plan, having a hypothesis, having a reason for entering, looking for these guys to get in sync. And exactly basically how the video started out. The reason I entered was because the 5-year was pushing the high and the others hadn't quite caught up. I felt like they were waiting to see if the 5-year would touch on that very high and maybe push it. And as I suspected, if it did, they would catch up, and that's exactly what they did. They all pretty much ran up to close to their highs. They didn't quite get there, but they pretty much did. So this trade worked out well. Thanks everybody for watching. I had fun making this video, and obviously I had fun making this trade. I will try to put more videos together like this one, explaining the process, my thought process. I think the biggest takeaways, I'm no expert, I still consider myself very much a rookie trader, but if I was to give someone who is completely brand new advice, I think the few takeaways from this were I entered for a good reason. I had a hypothesis. If I had been wrong and the price started going against me, I had no problem getting out with a few tick stop loss. I could have even probably tightened those up a little bit. And more importantly, I think the thing is you need to be dynamic in your thinking. Like I mentioned somewhere in the middle of the video, I'm not really a fan of entering a trade, setting a stop loss, setting a take profit, sit back and see what happens. No, it's a dynamic situation. Manage the trade based on that dynamic situation. Like I said, I had whatever it was, a 3 or 4 tick stop loss. If it had started to move against me, I don't have to wait for it to come down and take me out at 4 ticks loss. I could manage that and go say, nope, this is completely changed. The landscape has changed. What is happening in the market has changed. I'm just going to eat a 2 tick loss and save myself a few ticks. Or likewise, if this had hit on the high and went on a little run, I would have been trailing along with my stop. I would have been managing that take profit, and we would have went from there. So I really like what I did as well. I'll just mention taking the P&L off the screen. I honestly, when I was in these trades, had no, I know I'm up, and I know I'm up a couple $100 or whatever. I mean, you have a general idea. But it's not right in your face. You're not seeing those dollars and doing the math in your head. Or if you're in a trader evaluation, you're not thinking, okay, my goal is 6,000 and I'm up, 400 right now. And all of that goes out the window. You can just focus on the trade. So going forward, you'll probably see pretty much this look going forward where I don't actually have any P&L on my screen, and we might just have to do the math afterwards. So I'm going to leave you with that, guys. This video is plenty long. I hope you enjoyed it. Be sure to subscribe, and I'll see you in the next video.